Hello, my name is Jason Mercer, the Toronto Real Estate Board's Senior Manager of Market Analysis. I want to take a few moments of your time to go through our most recent commercial and economic update through the second quarter of 2012. In the second quarter of this year, we saw almost 3.5 million square feet of commercial space transacted through the Toronto MLS system. Now, this was down by about 22% in comparison to the second quarter of 2011, but this shouldn't come as too much of a surprise given the economic uncertainty that we've seen unfold over the last year, both with our trading partner south of the border and also, of course, in Europe as well. Now, almost 80% of leasing activity in the second quarter was accounted for by the industrial sector. And so this gets back to that global economic uncertainty that we've been going through over the last year or so, because a lot of these businesses are pointed towards the export of goods and services abroad, both to our major trading partner, the United States, but also to other countries around the world. And so what we've seen is a lot of these firms have taken a bit of a step back. They've put their real estate investment decisions on hold until the outlook for trade becomes a little bit clearer, hopefully in the second half of this year and certainly into 2013. Now, it is important to note that even with these global uncertainties in mind, we did see enough demand relative to supply in the commercial market to see upward pressure on lease rates on a year-over-year basis. So, for example, if you look at the industrial sector, we saw the average per square foot net lease rate up by about 13% to $4.92. And indeed, if we look at other sectors, commercial, retail, and office, both of these segments of the market also saw year-over-year growth in lease rates. Now, it is important to note that we have seen growth in the Canadian economy on a sustained basis this year, albeit at a lower rate than it was initially expected at the outset of 2012. Also in the second quarter, we did see stronger results in terms of labor growth in the GTA, with strong employment gains and a downward trend in the unemployment rate. So as we look forward through the second half of 2012 and into 2013, what will be most important for the commercial and indeed the industrial sector in particular is more of an emphasis on business investment and export growth as the components of overall GDP growth in Canada. And this will certainly bode well for more transactions and indeed further growth in average lease rates as well as we look towards 2013. Thank you very much for your time. I look forward to speaking with you again with the third quarter commercial results.